the region has just come through a very volatile moment. We've seen this 12-day conflict between Israel and Iran. Interestingly, regional equities holding up through the course of this, but of course, sentiment around the region has taken somewhat of a hit. Can I just get your reflections on what's unfolded over the last couple of weeks and how you're thinking about this ceasefire as it stands?
Absolutely. So the geopolitical fracturing, we think, is something that's going to continue, not just here in the region, but globally, and is something that investors are going to have to learn to incorporate as part of their investment playbook. Again, waiting for tranquility, for calm. We think, sadly, we think that investors would be waiting a long time. So we're going to need to kind of incorporate this into our investment frame. And to your point, Dan, I did think it was very interesting that markets, even here in the region, you would think the most kind of geared into, let's say, the uncertainty around that, actually continue to reflect, I guess, the very positive tailwinds, which we think will continue to drive the Middle East forward. So overall, our view on the Middle East would be somewhat or even very constructive. But of course, there is always this uncertainty, which we have to be extremely mindful of. Balancing those, for now, we remain constructive but watchful, I guess is how I'd put it, Dan.
Even in Dubai, we saw the market tracking at a 17-year high. So what do you think that reflects? Is that resilience through volatility, or are markets perhaps underpricing the risk of another flare-up that could ultimately derail the regional diversification efforts that we've seen?
A couple of things. Firstly, I think from a kind of technical perspective, there is a fairly substantial underweight, specifically in this region, from a lot of global emerging market managers. So there's a kind of technical stability or strength, I suppose, which is useful in moments of uncertainty. That's the first thing. The second thing, though, I really think there's just a lot to like. So, of course, reasonably, naturally, the news was dominated by the very scary geopolitical reality, as is completely appropriate. But at the same time, here in the Middle East, we've got astonishing tailwinds from being an energy and increasingly a talent kind of hub, and therefore becoming more and more central geopolitically, with President Trump's recent visit to the region, centered around business, prosperity, deals, flourishing, not least in that AI kind of space. So for sure, the geopolitical environment is uncertain. That is true and important. But there's also a lot that's very, very favorable here. The market balancing those out, I think, has decided that actually on net there are more tailwinds than headwinds. That's a view that we at BlackRock would share.
So what sectors or asset classes in the Middle East do you see as most mispriced right now, or perhaps the most ripe for opportunity, at least investable opportunities?
So a couple, I guess. So firstly, within EM local currency debt, increasingly we're seeing kind of the funding needed to deliver some of the societal change, most obviously in Saudi and the UAE, I guess. We're seeing that being funded less and less by energy. Energy is still very, very important. I don't want to overmake that point. Energy is still very important. But at the margin, we're seeing private capital be enticed here into the region, hopefully blending societal progress, so capitalism, capitalists, capital funding, sort of the infrastructure evolution, while earning a fair return. So that seems to me like a good deal. So EM local currency, we think, is an area which will be of increasing interest here in the region as the funding mix diversifies away from, let's say, purely energy into other areas, including fixed income. That's number one. Number two, in the equity space, we continue to like the UAE and Saudi specifically because, again, we think that the structural, as we call them, mega forces of being an energy hub, having the kind of demographic tailwinds, both local and onboarding more and more talent, obviously coming to the region, finding it a wonderful place to work and live. We think those are going to continue. And what that leads to is really a society that can build the technologies of the future, becoming locally, regionally, and even globally significant. We think that's going to continue now.
Give me your high-level thoughts on what's happening with the price of oil as well, because it's also been suggested to me that 65 USD is bad for business. And yes, you're right to make the point that the regional economic outlook is no longer hinging entirely on hydrocarbons. But of course, this is still relevant, particularly in large economies like Saudi Arabia. So 65 USD, what does that mean from an investment perspective, and where do you see the price of oil going?
So to the price of oil, a couple of things. Firstly, it does seem like OPEC Plus, maybe surprisingly, but they have made the decision to increase supply on an ongoing basis. Perhaps that's going to continue. So it does seem to us at BlackRock that there is just quite a lot of oil knocking around at the moment. So shorter term, over the next several quarters, it feels like, absent another geopolitical shock, which of course can happen, but absent that, it feels like probably a bit more supply than demand in aggregate, and therefore prices can stay soft. Bigger picture, and I think much more important to kind of the region, is the, for example, the Chinese story of electrification and the concern that that's going to go global. which will lead to significant increase in demand for energy, but maybe not hydrocarbons. So I think the region is acutely aware of this as an issue and is therefore looking clearly to diversify the broad economy. I think short-term oil price softness will accelerate and encourage the urgency around that. So for us, I guess, as private capital, as providers of private capital, actually, in a way, this should see a development more in the direction of private capital being useful. So it's a kind of mixed story, I guess. Some immediate negativity of a softer oil price, but actually, in terms of maybe the more important story of structural transformation, it should, if anything, increase the emphasis and necessity of society of this region moving in that direction, which is already happening, I think, and likely to continue, maybe even accelerate.